Hello and welcome to Fin Business. Today we have with us Mark on it and we are going to talk about Open API. Mark, it's an interesting time for banking and fintech industry right now. And to my surprise, each and everybody is talking about API and Open API. I would like to learn from you how Open API will actually benefit fintechs and banking sector going ahead.
Exactly, and we would say at Gartner that open APIs are at the top of the hype cycle right now. Many banks want to create open APIs and use those to engage with fintechs and of course provide better services to their customers. What we're finding is that there has been a lot of heightened expectation about the value of open APIs. Many banks have put out APIs and perhaps not been as happy with the uptake of the APIs that they would have hoped. But now there's a lot more rethinking about how to target developers successfully and how to think about the business model behind the APIs as well, so that there is a well-defined business model for why an open API will be exposed by a bank.
Okay, so the immediate question that comes to my mind is what are the areas, specifically into operations, specifically into services, where banks or financial services can use open banking?
Yeah, so one of the areas that is attractive for banks is that there has been a tradition of third-party fintechs using a screen scraping approach to allow customers to access their data through an app. So for example, an account aggregation app or various personal financial management apps. The fintech would ask the customer to key in their username and password for online banking, and then the fintech app connects as the user to the bank. And of course, banks don't like this for many reasons, and there is also a security concern as well about how well those credentials are being stored and managed by the fintech. So banks are very happy to now provide APIs as an alternative, so that if a fintech wants to, for example, provide account aggregation services, provide personal financial management services that show multiple different accounts, then the API route is much more attractive because then the bank can control the access.
Absolutely.
And they also don't require the end user to share their online banking credentials. They're using their password. So that's where banks have found a lot of value in APIs, is providing this more managed way to engage with fintechs compared to the screen scraping approach from the past.
Okay, let me give you some illustration from India. Most of the financial services from India using API specifically for the eKYC. What is the trend globally?
Yeah, so the trend globally is that banks in Europe, because of PSD2 regulations, have been forced to expose APIs, but particularly for providing access to accounts, so balance information, and also payments information, the status of a payment, setting up a payment, and so forth. So there's been a lot of activity in Europe. In other places where there hasn't been the regulatory push, and in cases as well where the banks are particularly strong, so in Europe, Australia, we found that the banks there have, to some extent, been opening up APIs. There's some good example like Capital One Bank in the US, National Australia Bank in Australia, but for the most part, many of the larger banks have not opened up APIs to the extent that you would think.
Sorry to interrupt, but any specific reason why not?
Well, because they already have more of what we would call a invitation-only approach, where they do have APIs, but they're not open APIs in the sense that there's a public developer portal. And that's worked fine for many of the banks, where they, on a case-by-case basis, will do integration with third-party fintechs. In other markets, so for example in South America, Brazil in particular, there's been a lot of uptake of open APIs as well. So that's a good example of an emerging market where, for example, Banco Regional is a brand new bank that has taken an API-first approach to banking and had the luxury of being able to build out their infrastructure with APIs there from the start. So we are finding that in general the regulatory push helps to allow APIs to be provided by banks, and also in various emerging markets as well. It provides a way for banks that don't have so much legacy core banking systems to start from an API first approach, which has been very valuable for them.
So according to my understanding, when you're open banking, you are connected to many or multiple banks, multiple financial services companies, and also third-party applications, which actually connects you to a lot of security risk.
Yes.
So the immediate question here is, how will you prevent that? How will you prevent the iceberg which is going to kill the Titanic?
Yes, it's a very good question, and in fact, in my conversations with clients, the next question after asking about open APIs is asking about the security of open APIs. And naturally, banks are worried about opening up access to accounts, access to payment information. And the other aspect of it as well is some privacy concerns as well, because if the end customer is sharing information about their account balance from your bank in the same app, where there's a bank balance from another bank, and then they are able to compare them, to compare things like rates, APR, and so on, then that does open up more competition. Also questions about data sharing as well. So from that point of view, we find that many banks have security teams that work very closely with their API teams. They also need to put in place API management products. So I'm one of the authors of the Magic Quadrant for full lifecycle API management. And typically banks will choose an API gateway that's going to enforce security rules on their APIs. What they're looking for is unusual patterns of usage of the APIs that show, for example, a bot or automated usage of the API that would indicate that, for example, somebody is trying to probe for weaknesses in the API, or that they have got a hold of credentials and now they're trying to pull down information. So a lot of work is going on with banks implementing API security, and there have been security breaches as well related to APIs, not just in banking but elsewhere. And I think it's fair to say that there's also good innovation happening as well in API security.
Okay, so on that note, I have a last small question.
Yes.
Will open API drive the banking growth?
It will. As I say, it has been at the peak of inflated expectations. A lot of banks put out open APIs. They ran hackathons. They made a lot of marketing noise about having the APIs, and perhaps not all of them had the success that they would have hoped initially. But we say in Gartner is that APIs are something that's not a success until they are a success. They become something where until you see the results, then you realize this is why we did the work to create these APIs. And we are starting to see that. And what you will see is more and more banks with open APIs putting out marketplaces, more and more fintech solutions in those marketplaces, people starting to pay for solutions through the marketplaces, and then also a lot of value being created around personal financial management apps as well. And that's really only starting now. So that will be the value. From the point of view of banks, it does of course drive usage of the banking systems themselves, but also there's opportunities for banks to create apps like that, to provide solutions for customers which also may use APIs from other banks. So they need to embrace that and not see it just as a threat.
Oh, those are great insights, Mark. Thank you so much for talking to Fin Business.